Good afternoon, good morning, and good evening to everyone, one and all. This is episode 4 of season 5 of The Smoking Barrel. I'm Rustin Edwards, based in Geneva, with my illustrious co host in beautiful, sunny Dubai,
Yep,
Stan.
it's cloudy today, but that's okay. My mood is bright. No, I'm good. How are you? We've been away. You've been away a couple of weeks. I was in Spain. You were in
Las
Vegas.
Vegas. Yeah.
Yeah,
Back in the USA for a
yeah.
short chandra.
Uh,
Shout out to my
and
dad for his 80th birthday.
yeah, Mr. Edwards, happy birthday, mate. And then we'll be in London at the weekend.
That's correct. IP Week, International Energy Week, or International Petroleum, which is the old school way of saying it.
It's
The
IP
annual
week, all right?
conclave of the oil industry once again joining and meeting up in Shepherd's Market.
Yes, yes, and other places apparently. Yeah, no, it is International Petroleum Week. It's petroleum. I know that gas will be discussed as well, but maybe not. I know I said that that's going to probably dominate the conversation. I don't know. Look, what do you think? This time next week, Monday, 11:30, we'll probably be walking to an establishment maybe for the first one of the week, feeling all fresh and lively. And fast forward 6 hours, we're like, oh God, another one, another meeting, another person I haven't seen since this time last year. But no, all good. I can't wait. It's going to be this will be my 24th IP week.
Wow,
I
that's a
know.
they should start issuing badges.
Yeah, but I don't want it. Probably like Get Out Granddad or something like that. But no, 24th IP week because I started April 2000. So traffic. So I'm waiting for a carriage clock or a P45 probably. But anyway,
Here's an interesting statistic for you, right? This is your 24th IP week. This will also be somebody's first IP week who's about 24, 25.
shut up, mate. Jesus Christ. I said I was in a good mood. The clouds are. No, you're right. I mean, when I was in Barcelona, I was we were at a company off-site, 700 people. It was great. We hired a hotel and lots of meetings. And someone called me a veteran. I was like, fuck you. So, I mean, is that what we are these days? Anyway, enough of how old we all are and all that kind of nonsense. What do you think is going to be dominating the alleyways and avenues of Shepherd's Market next week?
Oh, I think it's going to be a big question on what direction the market's going to take because there's been a lot of curveballs thrown into the face of traders since the beginning of the year. Potentially, after January 10th, when you had the increase in sanctions on Russian oil flow.
Yeah.
So I think that's going to be a big dominating factor this time around um, because it has been despite all of the headlines, it's actually been a very benign market because I don't think traders can really position themselves on one side or another and come up with a winning hand because the way the headline flow has been over the last 3 weeks, one headline you're up, next headline you're down.
Well, I think this is it, isn't it? I mean, we're mid 70s now. We last recorded 2 weeks ago today. Market was trading at $75.04. Today we're at $74.72. Okay, I know we've had Lunar New Year celebrations, we've had tariff talks, we've had interest rate, we had inflation. I know we're going to touch on all those in a minute, but is the market nicely balanced? Structure is fairly tight. We're going to touch on gas oil later. I know we're going to talk about that because that is the highest it's been in terms of backwardation for nearly a year. OPEC job done. I mean, is the Trump trade kind of been? It's not sort of priced into oil markets anymore. People are kind of not acting as dramatically as they used to when it comes to him sending a tweet about tariffs or whatever it may be.
Well, I think there is a bit that is not going to happen until they actually happen. Because I think if you're trading reactive to a tweet, you're going to get ran over. You have
Yeah,
to actually wait to see the actual result of the tweet come to fruition. For instance, I mean, we can talk about the whole kerfuffle around peace in Ukraine,
yeah,
which this week apparently the U.S. delegation, a Russian delegation, and a Ukrainian delegation are to converge on Saudi Arabia to discuss a potential peace plan for Ukraine.
Do you? Well, what's your? what are you dismissing this, or is it? Do you think there's
Well,
some
I don't
body behind
dismiss it at all because I think that's something that the Trump administration has been very vocal that they don't believe in forever wars, and the Ukrainian conflict is gradually becoming a forever war. It's becoming a stagnating battle between Russia and Ukraine. And I would say that I would agree with the assertion by the new U.S. Secretary of Defense that the only way that you're going to push Russia out of Ukraine is put more troops on the ground. And I don't think anybody wants to invest manpower to go and fight Russians in Ukraine.
it? Yeah, I mean
And so you have to come to a base realization that at some point you got to have a cessation of hostilities. And
yeah.
it's unfortunate, but that is the base reality on the ground.
And this is the BBC headline: Starmer ready to put peacekeeping troops in Ukraine as Europe holds emergency talks. Look, I
Which
mean,
that's they're going to have that discussion today in France because Macron called a summit with other European Union leaders to come up with an idea of what they would do to support Ukraine. And I think that's going to be the net result is that the European Union will have to put troops on the ground in Ukraine.
okay, but look, I mean, look, I hope it does because we all want peace, and the ceasefire's holding between Israel and Gaza. There was some news last week. We'll talk about that in a minute, but I hope that it does. There does come an agreement, and I hope as well that Trump doesn't kind of go, "Oh, look at me! I've come back, and there's peace in the Middle East, and there's peace in Russia and Ukraine." He probably will leverage it, but I hope he doesn't. But anyway, let's boil it all down for the viewers. Like, comment, subscribe. Does this mean that your Russian gas oil is suddenly allowed back into Europe again? Then,
It's allowed back in Europe, but it probably becomes commercially tradable once again.
do you think
And
so?
so I think it becomes commercially tradable, but maybe not back into Europe, but into other markets where you no longer have a price cap. I
Right.
mean, the European Union can still embargo Russian products because that's only gas oil, it's fuel oil, it's naphtha and crude. But if you get rid of the price cap and you say it's commercially available in other markets, then effectively you've allowed it into the EU without going into the EU because it basically displaces other molecules that would be going into other markets to
Okay.
feed into the.
Okay. Let's get into the weeds here because this is really interesting. Like I said, it's probably a bit preliminary, but there are going to be people who will be like glued to their screens. Geneva and Dubai have, let's say, cemented their position to be a conduit for trading companies in the past and the present now, right? Let's say that, right? Yeah. Surely, from a business point of view, people are getting prepared to suddenly go, right, I've got this new company I want to set up. As soon as we hear something positive out of the EU or there's tomorrow in Saudi, surely there's companies that are going to be queuing up to go, right, I'm ready. And like you said, it because of bureaucracy, it will probably take at least end Q2, something like that, to wind back any price cap enforcements or maybe less stricter enforcement of sanctions. But those countries that haven't applied the same sanctions as the West, really like G20 countries, really, Europe especially, of course you're allowed to trade Russian oil. So surely this is a moment that lots of people have been waiting for.
Well, I mean, Russian oil has never been sanctioned. It's always been under a price cap. So that's one
Yeah.
piece of information that I think a lot of people need to continue to understand. It is not a sanction. So you can
Well, no, hang
trade
on,
Russian.
hang on. You can't. The US aren't importing Russian oil. The
No,
UK aren't
no,
importing
you know,
Russian oil.
they've stopped importing. So the U.S. and UK, Canada, EU, I think
Australia.
Australia, New Zealand,
Yeah.
and Japan and South Korea have an embargo on Russian oil. They will not
Yeah.
accept Russian oil into their countries, into their controlled regions. However, there is no sanction a la Iranian sanctions or Venezuelan sanctions that prevent you from trading those molecules as long as you trade and abide by the price cap rules that were set
Yeah.
back in
Okay.
2023.
Okay. This is really important because I think that there is so much you could.
Now,
people may know that, but there's only so much you can sort of read before people are thinking sanctions, and your brain just goes Russian oil's banned. And I think that to clarify that is really important.
it is because it is not banned. It is you can trade it as long as you trade it within the price cap rules, which means crude has to be below $60 a barrel FOB. I think gas oil below $100 a ton FOB. I'm sorry,
I got
$100 a barrel,
yeah,
and fuel oil below $40 a barrel. As I think those are the price cap ranges. Please correct me if I'm wrong, but I think those are the
yeah.
ranges that people have to deal with.
Put them in the
And
comments below.
if you look at the math, I think they're all right around that price cap level. Now, that being said, individuals and ships have been sanctioned. They've been put on the OFAC list. They've been put on the EU sanctions list, the UK sanctions list for violating the price cap rules.
Okay.
That's where I think the misunderstanding comes into play is that companies have been put on the naughty list, lack of a better term, because they've not been abiding by the rules set forth under the price cap mechanism.
Okay. Okay. Hang on. So let's say that there's a peace deal, and the EU go, right, okay. So if the price cap is lifted, then everyone is free to trade it. You just can't import it into those countries that have boxed it, essentially.
Potentially, yes. Now,
But
they might also say, they still might also put in the rules that, okay, you can't trade from the UK if you're a UK citizen, but you can trade from somewhere else. Or as a UK citizen, you cannot trade Russian oil. Those rules might still be in place. You can also, nothing changes, but all the sanctions get lifted that were put on the vessels back in January 10th. If all those vessels also become tradable again without having any sanction on them, then you've just opened the spigot to go back into China with all those vessels, back into India with all those vessels. And you've again debottlenecked the system.
okay. So okay, yeah, absolutely. So from a business setup point of view, people are going to have a BDI on what's going to come out of Saudi Arabia, if anything. But if sanctions say sanctions are maintained, which they probably will be, because they're not just going to go right. You're welcome back into the fold now. I think things have progressed too far for that to be a possibility. But if if there's talk about a price cap being lifted, what happens to flat price? What happens to cracks? If there's
Well,
suddenly like,
I think you see a general sell-off in the market because
do
that's
you?
part of the geopolitical risk that's been supporting the market has been the Russian sanctions on oil flow.
What
Russia
about what
is
about
a
what about freight? Because the black with the
well
dark lit
again
fleet.
if you allow those oils to be commercially tradable again, then freight should also take a downward move because now everything, freight's a bit of a tricky question because you have a bunch of ships that were allocated that have been allocated to that dark trade, the black trade, however you want to call it, the dark fleet.
Yeah.
And if you take away the price cap mechanism, you say it's commercially tradable again, you don't have to follow specific rules anymore. You can trade like normal. It should actually be supportive to freight because now you've opened up more cargoes to the entire market versus
I see.
having a segregated market.
Right. I
Now,
see.
the the and does this cause some of these older ships, that are 20, 21, 22 years old to go to the scrapyard? Because when they're no longer sanctioned, scrapyards can now buy them using US dollars and scrap the steel and sell the steel because it's now no longer sanctioned steel.
Wow. Okay. Yeah. No, you're right. I mean, I hadn't thought of that because you would think that if the dark fleet kind of opens up and now it's sort of more accepted because the sanctions aren't as enforced, there'll be more ships. But actually, because the restrictions aren't as tightly enforced, it means more oil will flow, which is negative for flat price, but is actually bullish freight.
Yeah,
Interesting.
anytime you have more cargoes, that's bullish freight
Yeah, of
because there's only
course.
so many ships in the world, and you can have more cargoes to move on those ships.
Okay. I mean, look, I was going to say, what do OPEC do? But I'm not going to ask that question because I work at Kepler. Okay. So we'll leave that there. But
What
look,
I think
that's going to
OPEC
be an
does,
interesting.
I think OPEC does absolutely nothing. I can talk about OPEC.
You can. I'm gonna just go down here. Just talk amongst yourselves. No, but what happens? Yeah, I mean yeah, that is
I mean, OPEC,
what happens to OPEC
even,
Plus.
even if there is no deal, right? If there is no deal, OPEC can't do anything. I think even with this April, um, putting oil back in the market into April, I still think that gets kicked down the road again. I don't think OPEC can afford to allow more molecules into the marketplace because they'll just flood the market.
Okay. Yes, Russ. I agree with you, Russ. Okay. No, listen. For those who are like, why is Stan being weird today? In the latest episode of Why is Stan being weird today, is because we are, as Kepler, we are now a secondary source. You can see my screen there, Rustin, and look who
Mhm.
we've hired. Da, 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 da. Amina Bakr. That's great. Started a couple of weeks ago. Those who don't know Amina, very well respected, probably the most respected. I know there are others, but I'm going to be biased. OPEC correspondent. She
Commentator.
joined us a couple of weeks ago. What's that?
Since she's one of the most probably respected, sought after commentators on OPEC.
There you go. You see? Yeah, look, so OPEC, she wrote this last week, first article. Congratulations. You can just see what we just go down to this bottom one, OPEC production, what you know, you can see she gives it away. Robust compliance amid an uncertain market. Well, look, I suppose when things are uncertain, we're in a range bound market, and we are certainly in that at the moment. Like we just said earlier on, mid 70s. People are pretty happy. Is it Goldilocks? I'm not so sure. I'm going to sneeze. You speak now.
Well, I mean, it comes down to, okay, we're in a range bound crude oil market, but that means, our products actually picking up the slack, and that's where traders can actually look to make some margin is what's going on with the product side of the I mean, we've had a very strong fuel oil market to start off the year. High sulfur fuel has been on a tear.
Yeah.
VLSFO, not so much. Gas oil markets have been rather robust. And a lot of that can be equated to the actual cold weather that's been hitting North America and Europe over the last 4 to 6 weeks.
Yes.
Arctic blast after Arctic blast. I mean, if you saw any of the pictures from the Northeast, I mean, or from even mid-con USA, I mean, the massive snowstorm hit Tennessee and Kentucky this over the weekend. So
Yes,
with
I
that
saw that. Yeah.
comes increased heating oil demand.
Yeah, I mean, look, we've got gas oil cracks just under $20 a barrel. Might be a little, I think it's down a little bit this morning. It is, most things are pretty red this morning, but gas oil's having a particularly bad start to the 17th of February. But backwardation, $11.25 March, April, $9 April, May is a pretty strong curve out till late summer. And this is the steepest it's been in 10 months. And you're saying because it's just cold, it's been a bit of a cold snap.
It's full set. I mean, you just take a look at how much heating oil demand there is in the world, and when you have cold weather, people like to be warm.
Yeah. Yeah, can't
Um,
do much about that. Yeah.
but how does that look with the arb flows on gas oil and
Well,
distillates in general?
I'm pleased you asked. I mean, look, this is sort of linking up all the stories that we've spoken about this morning so far. Is peace in the Middle East or relative the ceasefire holding. Um, let's just forget Russia Ukraine for a moment. We just touched on that. What the potential impacts could be: freight and flat price. Um, Peace in the Middle East. The Houthi rebels not as active. Certainly not. We've seen a dramatic drop off the number of attacks in the. It's still going on, but nowhere near as much. Does that mean a return to the vast majority of the shipping market going through the Suez Canal as opposed to the Cape of Good Hope? Maybe. You can see here, my colleague George put this together. Uptake will be gradual, given still high war risk premiums. I think that's going to be key. I've actually got a friend of mine who's hosting a party next Wednesday. He's in the insurance market during IP week, the first one that he's had, and I think it goes to show you how relevant now insurance has become in the market. It always, of course, has been like a significant requirement whenever you're going to move anything from point A to point B. You need insurance. But in terms of it becoming a sort of moving the needle, I would say more and more. And I think next week, the guys hosting are the underwriters suddenly going to price in this war risk, price out the war risk premium and say, peace in the Middle East, we are going to allow all charterers liability insurance policies to go through the Suez Canal. I don't know, but look, are we going to start seeing it? We're not sure. You can see the drop off here, via the Suez Canal. And then suddenly we had, all these issues after, Israel, the Hamas issues in the east of the Med. And then you can see the sudden drop off. June last year really fell off a cliff. Are we starting to see that pick back up? Bit too early, but look, I think it's one that people are extremely interested in. If you just look at the map here, this is for liquids. You can see just still the amount of traffic that is going via the Cape. But there's still significant volume that's going through the Suez Canal. I'd actually got to get some guys to put together what this picture looked like 2 months ago compared to now. We saw an LNG cargo. If I just take out LNG, you can see there's another LNG cargo that's just going through there now. That went, there's a couple up here. That went quiet for a number of months. I think 12 months with no LNG boats going through the Suez, only via the Cape. Is that a sort of a bellwether? I don't know. I mean, what's your view here? Is it still too early?
Well, I think it's still too early because I think you still have to get the insurance to come down to a more reasonable level. I mean, when you look at the insurance rates for the war risk premium to go through the Red Sea, it's almost as if you're just increasing your cost structure around the same as with the Fuel EU Maritime or ETS, not the Fuel EU, but the ETS. So it is a significant cost to go through the Red Sea. So
Yeah,
unless you've got a cargo premium that's paying for that voyage, you're not going to do that voyage because why would you? I think when you look at it from the container ship standpoint, the container lines have yet to commit going through the Red Sea again. I think they've
yeah.
figured out that going around Africa actually makes a bit more money for them. So they're more than happy to keep that tightness in the market.
So you
But I
see
think that
you see on the container side, you see that being a permanent shift.
I don't know if I'd call it a permanent shift. I think I'd call it a stable shift at the moment that could revert back. But again, when you're making a change in container line movements, that takes a lot of work to make that happen. It's not like, okay, flip the switch and we're doing this now. Because when you think of all the different counterparties who are involved on a container ship, 20,000 boxes, you could have 20,000 different charterers because they all have a box.
Yeah, of course.
And if they think your ship's going here to here, they'll go that way. If they think you're going this way if you're going from Singapore to Cape Town, okay, great. If you're going Singapore to Ghana, okay, great. If you're going Singapore, Rotterdam, okay, you can have two options on how you get there. But trying to optimize your cargo movements on a container ship versus that of a tanker or a dry bulk ship where you're using one port to one port,
Mm,
it's much easier to change your routing versus a container ship. And
interesting.
when you look at it from a freight absolute freight differential, it's about $500,000 around the Cape versus the Red Sea for a Suezmax. Yeah.
Additional,
Additional to go around the Cape versus going through the Red Sea, just from a
even with the
freight,
Suez Canal fees.
freight just from a freight standpoint,
Okay, okay, got you.
because you have less fuel. You're consuming less fuel. 2 weeks less fuel. That's fairly expensive.
I wonder how Greta thinks about that. What Greta thinks of that.
Well, if
If
the
it,
if the world was concerned about carbon emissions as much as they would be pushing for peace as much as possible.
yeah, I mean, yeah, I'd love to see the head of Maersk versus Greta, because Maersk are making a bit more money apparently, by going via the Cape, but burning a lot more fuel.
Yep.
Okay, well, let's see if we can arrange that meeting. Let's see if we can get Greta on board. Anyway, enough of her. I'm sure she'll be at IP Week throwing orange paint at us next week. Maybe.
Nice.
Yeah. Hopefully not. Okay, so just sticking on the shipping side, just quickly, I saw an article on Friday. Singapore bunker volumes down 9% year on year in January.
significant drop in bunker volume. And I haven't analyzed the numbers yet because I haven't seen the data just yet. Try to call them up the NPA website as to what exactly was contributing to the overall drop. But it looks like it was a drop across the board, which could be attributed again to just the seasonal change and the fact that we had the Chinese New Year a bit earlier. The Lunar New Year was a bit earlier this year than it has been in the past. Lunar New Year happened in the last week of January, where typically it's the second to third week in February.
Okay. Well, look, I mean, I can help you there. Roz, you know Roz. Hand on. Rebecca put this together. So the Red Sea bunkering impact, we're touching on it in a minute. Just stick on Singapore. Singapore's bunker sales saw a 9% year on year and 7% month on month drop to 4.4, mirroring weaker demand during the Lunar New Year. Okay. High sulfur fuel oil share of fuel oil hit a 2 month low at 40%, while bunker costs declined 5%. So a bit of seasonality. This is an interesting one, though. The gradual recovery of shipping traffic in the Red Sea following a temporary halt on Houthi attacks has led to a shifting bunker fuel oil dynamic. We estimate diversions added approximately 500,000 ton of additional global bunkering demands. This is what you were just saying, yeah?
Yes.
Um, a return to normal traffic would erase most, but not all of this volume. Okay.
Yeah, because when you
Okay, well,
think,
there you go.
when you do the math, 14 days, a ship burning 40 tons of fuel a day, 14 days, um, that's a significant amount of fuel that is saved by not going around the Cape.
500,000 tons. I mean, where are fuel oil cracks right now? Have they come off a little bit, or is it steady Eddie?
Well, again, it's been a case where high sulfur fuel cracks have been actually fairly strong, and I think part of that has to do with the fact that you've got the renewed sanctions or the increased sanctions pressure on Russian oil flows that happened with January 10th, where that not only impacts crude oil but also impacts other dirty products such as fuel oil, which Russia
Yeah.
exports a lot of fuel oil. And so if you've curtailed the amount of fuel oil available in the market because it's on a sanctioned ship, those buyers of the sanctioned oil who don't want to run afoul of OFAC or the EU will start buying commercially available fuel and thus make a higher demand profile against a steady supply in the commercial market.
Do you think?
We've had some
Do you think?
refinery issues that have also impacted the amount of fuel oil available, but nevertheless, it's the fact I think you have just a higher demand pull, which has caused high sulfur to be stronger than normal based on the current demand profile.
Do you think that fuel oil will be one of the most hit products if there is a peace deal, Russia-Ukraine, because the drone attacks will stop?
Well, I think fuel oil, gas oil, naphtha all will find a weakness. Naphtha has also seen a resurgence in value over the last 4 weeks.
Yeah,
Naphtha cracks are in the still negative at minus $1.50 versus -6 where they were at the beginning of the year.
yeah,
So I mean, you have a very strong profile both in naphtha, gas oil, and fuel oil, which contributes to the backwardation you mentioned earlier in the gas oil market. Is the fact that, again, Russian oil flows have been curtailed by the implementation of sanctions on ships that were transporting Russian oil outside the price cap.
yeah. All right. So look, all eyes on that. I mean, it really is going to be a bit of a game changer. I'm sure will dominate conversation next week. Okay, moving on just from that. So let's talk about, just before we wrap up, let's talk about the almighty dollar and the dreaded inflation.
Yeah, so that was, I think, the big surprise last week was the CPI numbers out of the United States showed an uptick in inflation when people are expecting kind of a flat inflation number, and Chairman Powell of the U.S. Fed saying that they could potentially be looking at rate increases, not any decreases, which kind of put a kibosh in the bearishness against the U.S. dollar and bearishness against the 10-year Treasury note.
Yeah. Because we've got, so what did we go? In December, the Fed reduced to 4.25 from 4.5. That was a third cut last year. But the dot plot is projecting only two cuts out till the end of next year, down from the previously anticipated four. Yeah, I mean, look, it's interesting, isn't it? I mean, what's CPI? What would you say? US CPI implies concerns about sticky inflation. Core CPI, this is Reed who put this together last week, my colleague in Texas. Core CPI, when measured over a 6-month period, finished January at 3.7% annualized, marking the highest level since May of last year. You're right. So this is really sort of put a spanner in the works for those who are hoping for cheaper borrowing costs.
Well, I think it's also going to impact the current administration's agenda as well, because higher interest rates means that everything gets a bit more expensive. Now, the interesting side note to all of this, and one of the things I'm going to throw in there is the anecdotal response is eggs in the United States. When you
Eggs.
think of eggs, eggs are a commodity that we all consume. We all love our English breakfast. I love good English breakfast. Love a good poached egg every once in a while as well.
Yeah.
My go-to is always eggs Benedict.
There you go.
However, I mean the price of eggs have skyrocketed in the United States. Now, how does that feed into inflation? Because we as consumers, we always think of going to the supermarket, buying a dozen eggs or buying 10 eggs, depending on where you live, having cooking your cakes, making your pancakes, making your omelets, whatever at home, consuming an egg because it's ubiquitous to us all.
Yeah.
However, in the US, a dozen eggs have gone up almost 200%. And when you have that type of increase in cost, it also rolls into the other goods that eggs are used to produce in the United States. There's a lot more industrial uses for eggs that we don't really see as consumers because we're buying the eggs for our omelet. But when you go into a lot of pre-processed foods, a lot of stabilizers, all come from egg byproducts of the eggs that aren't sold to the consumer, they're sold to other needs. And in the
Yeah.
cosmetic side of the world, eggs are used in cosmetics all over the place. Eggs are used in paint in some cases. So there's a lot of different parts that eggs go into that feed into the overall inflation story. When I was in Las Vegas, um, funnily enough, there's rationing of eggs where you walk into a grocery store, there's a sign, 1 carton per person. I mean,
Please.
that to me is an amazing story about what is going on with eggs and what's happening with eggs and how
Yeah.
that's feeding into the inflation story.
I'm not going to drop
And
in
it's
any
all
stupid jokes.
and it is all due to bird flu
Yeah,
in the United
159 million birds have been culled since the outbreak began in 2022. The average price for a dozen large grade A eggs reached a high of $4.95 in January, up from $4.15. Turkish producers have agreed to export. That's weird, isn't it? Is these turkey eggs or are they eggs from Turkey? Sorry, that
eggs
was a
from
bad.
Turkey.
That's a bad joke. That I can't believe there's 15,000 tons of eggs that got to go to the US by June 2025. That's a lot of eggs. Thanks, Turkey. It's a bit weird that go to another country where there's not. It's not. Anyway, yeah. Look, I mean, your avocado toast with eggs may become a breakfast luxury rather than a tasty staple, says BusinessInsider.com. Very good. Yeah. Look, I mean, eggs adds to the inflation. It seems to me that I don't know about you, and look, I just want to
When
close
you
up
think
with
about
this.
it, so you go back to what you read earlier. How many million chickens were killed?
159 million.
And those are chickens that can't be consumed. They are destroyed. And so when you think of chicken as a meat, a lot of people eat chicken, like roast chicken. They like their chicken breasts. They like their chicken wings. That's 159 million chickens that are off the table.
That's a lot. That's a
All it
lot of
does is
chicken. Bless them.
reduce the supply of that base meat for human consumption, which
Yeah.
again increases the cost.
The Colonel would be going mental right now to the threat of any chicken wing shortage. Anyway, look, good to see you. I will see you in person next week. We're closing 74.77, up 3 cents on the day. Pretty benign. Market's waiting for next week. Tariffs, peace deals, interest rates, all up in the air, but a fairly flat, boring market for now.
Well, I think it's a flat, boring market that has more downward bias than upward bias here for the time being. Um,
When do you not?
just because that's the way it's going to flow. And when you get
Yes.
rid of the political risk and support, I think $65 becomes rather easy to obtain with when you lose the geopolitical risk.
Yes. And chickens matter too, right? We should get that. We should get that going, all right? Chickens matter too.
Yes. You're so plucky.
Yeah, I've been trying my best not to make any crap chicken jokes, and you just ruined it. Anyway,
Well, I should recall a story of one commentator on this podcast who was going to wear a chicken suit at one point.
yeah, but I didn't have to because I was right. Anyway, let's move on and say goodbye to our viewers. Don't forget to like, comment, subscribe.
Yeah, don't get cooped up too much. We'll see you all at IP Week,
Excellent.
and you
All
can
right.
listen to us squawk about oil markets all day long.
Bye.